Following a thorough board review and shareholder approval, in April 2025 BlackRock American Income Trust underwent a unique strategy change. Management of the trust shifted from BlackRock's U.S. income and value team to its systematic active equity team. This is the first investment trust to employ a systematic investment approach. Given the prevalence of growth funds available, the trust continues to differentiate itself via a focus on value and income, with its performance referenced against the US 1000 Value Index. BlackRock's systematic approach combines human insight with big data, machine learning and AI for portfolio construction and the exploitation of market inefficiencies. The team aims to generate risk-controlled, consistent returns at a lower cost. A diversified portfolio ensures that no single stock will drive the trust's overall performance. Their database now includes around 1,000 different data signals, compared with around 250 in 2013. The team scours traditional and alternative datasets to uncover insights that can drive future returns, focusing on areas that a traditional investor would explore, for example company fundamentals, market sentiment, macroeconomic themes and ESG. Various datasets are combined, and the resulting models are optimized to find the best trade-off between return, risk and cost. More than 1,000 US stocks are evaluated and ranked daily, with all signals ascribed an alpha score between +3 and -3, which are combined to give an overall forecast for a stock. A portfolio can then be built based on the highest expected return for a given tracking error, taking trading costs into account, which is diversified and risk-controlled. Country and industry relative weightings are typically constrained at 2 to 4%. BlackRock's systematic active equity team has more than 100 investment professionals and around £25 billion in dedicated US large-cap strategies. The team has been in place since 1985 and throughout its history it has sought to innovate and evolve the insights used within the investment process, while maintaining the core philosophy of blending human insight, data and cutting-edge technology. Scale is key given the high IT and personnel costs of a highly experienced team that has operated through multiple market cycles. Two of the team have been selected to manage the trust: Travis Cook, a managing director, and Muzo Kayakan, a director and portfolio manager. Other enhancements made to the trust include an enhanced dividend, a fee reduction and opportunities for shareholders to exit at close to NAV. Historically, the annual dividend was 8.0p per share, made up of 4 equal quarterly payments. There are now 4 distributions based on 1.5% of quarter-end NAV, equating to a variable annual payment of 6% of NAV. This may be attractive to investors seeking US market exposure while receiving a higher-than-average dividend yield. Annual management fees have been reduced from a flat 0.70% of net assets to a tiered structure of 0.35% up to £350 million and 0.30% thereafter, with a fee holiday for the first 6 months. There was a maximum 20% tender offer in April 2025, which was undersubscribed, with only around 16% of the issued share capital tendered. Also, there is a periodic 100% tender offer if 3-year performance or minimum fund size targets are not met. The trust's performance hurdle is 50 basis points annual NAV total return outperformance, net of fees, versus the reference index over each 3-year period from the 1st of May 2025. A tender offer may also be triggered if the trust's NAV at the end of each period is less than £125 million. If you would like to learn more about BlackRock American Income Trust, please visit the Edison Group website.